It was the repeated habit of forcing trades that led to it. It was the erosion of discipline, the slow breaking of rules, the accumulation of bad habits. The one bad trade was just the final crack in a wall that was already collapsing. So how do you escape the trap of forcing trades? The answer lies in redefining what success looks like. Most traders measure success by whether they made money today. But that mindset creates pressure to always trade. Instead, measure success by whether you followed your plan today. Did you wait for your setup? Did you avoid unnecessary trades? Did you preserve your capital? If the answer is yes, then you succeeded, even if you didn't take a single trade. Success in trading is not about daily profits, but about daily discipline. Another powerful shift is to view not trading as active work, not wasted time. The hours you spend waiting are part of the job. They are not empty, they are necessary. Just as a soldier standing guard is not doing nothing, a trader watching and waiting is not wasting time. You are protecting your capital, protecting your discipline, and building the patience that separates winners from losers. The trap of forcing trades is also tied to fear of missing out. You see the market move without you, and you feel like you're losing money by not being in. But here's the truth. You don't lose money by missing a move. You only lose money when you click. The market will always create another opportunity. Always. The difference is, will you still have the capital and the discipline to take it when it comes? That's what patience protects. One of the hardest but most freeing lessons a trader can learn is this. You don't have to catch every move. You don't even have to trade every day. You just have to protect your account and wait for the right trades. The ones that align with your plan. The ones that don't need convincing. The ones that feel obvious. Everything else is noise. Everything else is a trap. In the end, forcing trades is not about the market at all, it's about you. It's about your ability to control your impulses, your ability to accept uncertainty, and your ability to be patient when nothing is happening. If you can master those things, you will never again fall into the trap of trading just to trade. You'll understand that doing nothing is not weakness, it's strength. It's the kind of strength that allows you to survive, grow, and ultimately thrive in the market. The market will always tempt you. It will always dangle half-formed setups, fake breakouts, and moves that look like opportunities but aren't. The amateurs fall for it. The professionals don't. And the only difference between the two is patience. Patience to wait, patience to observe, patience to do nothing until it's time to do everything. That is how you escape the trap of forcing trades. That is how you stop bleeding unnecessary losses. And that is how you finally step into the mindset of a consistently profitable trader. There's a phrase you'll often hear in trading circles: the market pays the patient. It sounds simple, almost cliché. But behind those 4 words is a truth that separates those who make it in trading from those who burn out. The market does not reward the busiest, the most aggressive, or the loudest trader in the room. It rewards the one who waits. The one who can sit through silence, sit through boredom, sit through temptation, and still hold steady until the perfect moment arrives. This is the waiting game, and it is the hardest game of all. Waiting sounds easy when you talk about it. People imagine that patience is passive, that it means simply doing nothing. But doing nothing is not the same as waiting. Doing nothing is careless. Waiting is intentional. Waiting means watching closely, staying sharp, being ready to strike when the opportunity appears. It's like a lion in the tall grass. From the outside, the lion looks still, almost lazy, but inside, every muscle is coiled, every sense is alert, and the moment prey steps too close, the lion moves with explosive speed. That is what true waiting looks like in trading. But most traders are not lions. They are rabbits. They hop around, nervous, moving constantly, always afraid of missing something. They don't know how to stay still, so they exhaust themselves chasing after every flicker of movement, and in the process they waste energy, they expose themselves to danger, and they often get caught. The difference between a rabbit and a lion is not intelligence, it's patience. The waiting game in trading tests your psychology in ways that few other professions do. Think about it. In most jobs, productivity is measured by activity. If you work in an office and your boss sees you sitting idle, it looks like laziness. You're supposed to always be doing something, sending emails, typing reports, making calls, Activity is rewarded. But in trading, activity can be poison. If you carry that same mindset into the markets, you'll think you have to be in trades constantly to be working. You'll believe that sitting out means you're failing. And that belief will drive you straight into unnecessary trades, where you bleed your account slowly and painfully. The irony is that the best traders often look unproductive to outsiders. They spend entire days watching and not clicking. They spend weeks waiting for a single setup. They take far fewer trades than the average retail trader. But when they act with clarity and conviction. Their trades are not guesses, they are strikes. And those strikes are powerful enough to cover the quiet waiting that came before them. Why is the waiting game so hard? Because it pits you against your own instincts. Human beings are not wired for patience. We evolved in environments where hesitation meant danger. If food appeared, you took it. If a threat appeared, you acted. Our brains developed to value quick reactions, not careful waiting. But in the modern trading world, those instincts betray us. Acting too quickly, too often, is what destroys accounts. And resisting those instincts takes deliberate practice. Consider a common scenario. You've been sitting at your desk for hours, staring at charts. You told yourself you'd only take high-quality trades, but nothing has appeared yet. Slowly, you start feeling restless. You convince yourself that maybe a mediocre setup isn't so bad. After all, the market might move without you. So you click, you enter. And deep down, even as you do, you know it's not the setup you promised yourself you'd wait for. But you couldn't stand the silence anymore. This is the exact moment the waiting game is won or lost. Not when the perfect trade appears, but in the long stretches of nothing. The real challenge of trading isn't executing the trade, it's staying disciplined in the emptiness between trades. That is where most traders fail, not because they lack skill, but because they lack patience. Here's the paradox. Waiting is what gives your trades meaning. If you could take trades every minute, they would lose all significance. The fact that you wait for hours, days, or weeks for a setup makes that setup valuable. It means you've filtered out noise and chosen clarity. The longer you wait, the stronger your conviction when the moment comes. That conviction allows you to hold through drawdowns, stick to your stop loss, and let your winners run. Without waiting, you don't have conviction. You only have hope. And hope is not a strategy.
Good evening, everyone.
Good evening.
Yes, good evening. So, welcome for our webinar for tonight. Joben, Johnny, and Mr. Nani. So, tonight we're going to explore about how big institutions, banks, hedge funds, trade the Forex market. As you know, us retail traders have very small impact on the market. You know, like a 20 pip move price action requires a lot of money in the forex space, millions. And catching this move, requires some info, okay? How they manipulate this price action in such a way that you will end up scratching your head like what just happened. You know, it's like you are in this trade and then suddenly there's a spike going up or a spike going down in your charts. And for the most part, when especially in our early days in trading, when I was starting, I can't uh, I can't understand such concept. You know, like it seems everything's going fine. Your trade is going well, and suddenly they just dump this price action in such a way that hitting your stop loss is just easy like that. So we will go through the slides, okay, and we will see how this actually is you know materialize. And I hope you will get some, if not the best idea. Okay, so trading like the institutions, how smart money sets traps for retail traders. Okay, and smart money. Okay, who are the smart money? Yeah, the big boys, the banks, hedge funds, and it's they somehow like have this, you can say, manipulation in the market because they have the money, they have lots of orders, and they can um, make the market move to the direction they want. And you will understand this as you go along in your trading. Many in many times you will see this price action uh, more often than not. Okay, and number three, the retail trader's trap. Us retail traders, okay, when we see these big candles going up or down, like it's time to buy, it's time to sell. There's a big candle now, but it so happen, it will go in the other direction, and hitting your stop loss and losing this money. So we don't want that. And I know it's impossible to know or predict the future, but as traders we only trade what we see, huh? And then smart money concepts. We had this webinar in the past. You can check our Algoter YouTube channel there and learn more. But of course, as I will show you in the chart example later on, and you can somehow like refresh your memory about these things, huh? And how to spot the smart money moves. Okay, the trade idea, the strategy, how to trade this, its risk management. As you know, I always advise to risk 1 to 2% of your trading capital to stay longer in the game. But your money, the money is your money. I'm just giving you advice, as with all the majority of the traders, especially if you are a funded trader. This risk management is really important. Even trading like a $20,000 account, and if you don't have this risk, yes, you are going, you are profiting like 5,000, $10,000. But when you are a funded trader, this risk controls will trigger will trigger and lose all that 10,000 and resetting your account. So it's very important. Now, I'm just giving an example, okay? Because who knows, maybe all of you or some of you would like to be a funded trader in the future. And this is very important. And the conclusion in the end. So let's go on with the slides. Okay, as you know, we have the 50% deposit bonus. Algotur is giving you 50% deposit. If you deposit 100, you will get 50. 500, you will get 250. 1,000, you will get 500 extra. How nice. Avail this, my friends, okay? Because you'll never find such giveaway amongst the other brokers, all right? And spread the word as well to your friends, your family, and they can benefit from this 50% deposit bonus giveaway, which is sponsored by Algoter. All right. So act fast. Only 5 slots available. This could go fast, or it could entirely, be gone forever, and you will not be able to avail. So avail now while it's still available, and you can always contact our Algoter managers to assist you very, very, very well. All right. So, trading like the institutions. So, institutional traders have one major advantage over retail traders. Okay, deep liquidity access and order execution strategies that reduce market impact. Unlike retail traders placing small positions, institutional players manage massive order sizes. So, just what I've said, they have lots of money, millions, if not billions. So often, thousands of contracts at a time. But trading in large size isn't as simple as clicking buy or sell. All right. The key to trading, like an institution, is understanding how liquidity interacts with price movement and learning how to position yourself alongside big money instead of against it. So insights, okay? So in summary, okay, institutions, banks, hedge funds move the market. Yes, because as I've told you, us small traders cannot, influence the market as compared to these institutions. All right, retail traders often trade against them, as you see, and that's why there's a saying in Forex: the trend is your friend. Okay, never trade against the trend, my friends. Okay, because in order to capitalize well, especially if you're scalping, you need to follow the trend. Okay, don't trade against it. So the goal is to learn to recognize institutional traps. So we will see that later on as we go on in the slide. All right. So welcome, my friends. Who joined us now? Mm, okay, some Algoter managers. Hello, Algoter managers, Mr. Henry, Kaya. All right. So moving on. So who are the smart money? So these are the largest financial institutions, okay? Hedge funds and banks move the markets with their big capital, okay? It's in the millions, hundreds of millions, could be by billions if they are really trading that hard. So they also use liquidity hunting. All right. When they see the liquidity somewhere there in the highs, in the lows, equal highs, equal lows, those are the liquidity. And I hope you already know what liquidity is. And when you see these things, equal highs, equal lows, where if you will see some consolidation, okay? Price is just going in the sideways. So if you want to sell, you'll all put your stop loss above this price, right? Above it. It's because you want the price to go down. So these banks, these large financial institutions will push the price to your stop loss. They will really manipulate this, and now all the stop loss are triggered, giving more liquidity, giving more money in the market. And then from there, they will have their orders placed, ready to be triggered. And then it will dump this price action to the downside, and you will all see this, many a times in your charts. So those are the smart money. All right. So the retail trader's trap. Hello, Sir Joseph. Welcome to our webinar for tonight, sir. Hope you can, engage. Yeah? If there's anything you want to ask, please do so. So the retail trader's trap. Okay, placing stop losses near the obvious highs or the lows. Yes. If you want to buy, you will put your stop loss below this price, and everyone else will do the same. Okay, and then entering trades too early on breakouts. Okay, you say, well, it broke the swing high, it broke the swing low. Maybe it's time to enter, time to buy. Yes, that's the logical way of. I'm sorry, I think the internet connection is somehow choppy tonight. I hope everyone can hear me. Huh? Can you please confirm? Yeah, I hope you can see my screen back now. Can everyone see the screen? Can you please confirm to me in the chat? All right, thank you. Thank you, Mr. Jovan. Okay. All right. So if there's any, technicality in our webinar, please just advise me in the chat. Huh? All right, sir. Because, sometimes this internet connection, especially when it's raining, it's affecting this bandwidth, I will somehow. So, so as you can see in this slide here, okay, the retail trader's trap. So, how to trap us small time traders? So, when you see the some breakouts, in the chart, when it broke the high or it broke the swing high or the swing low, and then you will anticipate this is the time to buy, and for a couple of moments there, you think price is going your way, but suddenly it reverses, leaving you in the dark and then triggering all your stop loss. So those are the manipulation, as you can say, by these big institutions to put more fire. Sorry, put more fuel in the fire, and then okay, following false moves before reversals. That's it. When you are, when you place your trade and you are thinking this should go your way, but for a couple of moments there, it will reverse and then leaving you again on the other direction. So these are the way how they do this. So hope you will get to see this in action later on, huh? As we go along. All right. Okay, smart money concepts. Okay, these are the four things you need to understand. Okay, liquidity pools. All right. What are the liquidity pools? Equal highs, equal lows. When price doesn't seem to move and it cannot go push beyond this price range, it's just going sideways. All the liquidity is there. Okay, retail traders are getting trapped there. They're thinking they want to buy, but it's not going up. It's just making some equal highs in the price action, and that's where they put all their stop loss there. And suddenly, you will see a spike triggering all your stop losses. So that's one. Stop hunts. Okay, it works the same way. So stop hunt when there's a lot of stop losses there accumulating it will wick this area just by the wick, and the body candle will close above this, and that's where you will see this thing going on as the manipulation continues its dark agenda. Okay, order blocks, as you know, there should be one, depends. So for example, in a bullish trend, there's a red candle, and then beside it there will be a big bullish engulfing. Okay, for the upside, if they want to go up, they will have this bullish engulfing there, and then it will retrace back to this order block, and then finally it will go to that direction intended. But as you know, if you don't know how to spot this, and now is another story. So as you will see later on, we will see these order blocks in action. All right, fair value gaps as well. Okay, when you know fair value gaps, three candle formation, there will be a gap in the middle between one and the first and the third candle. I hope you already know about these order blocks, and you can easily spot this, anyway, in any time frame, huh? So this is very important, my friends, huh? Don't forget about this concept. All right, now these are just the explanation of what I have just shown you here. Okay, liquidity pools means areas where retail stop losses accumulate. As I've told you, all the stop losses are there. And then above the resistance, either it's above the resistance or below the support, right? Equal highs, equal lows. You will put your stop losses there. So institutions push price to trigger them there, leaving you behind. So don't be the liquidity, huh? Do not be the liquidity, because this will easily happen, many times in the chart. So order blocks, okay? It's the last bullish or bearish candle before the strong move. As I told you, there will always be an engulfing candle beside this. All right, and then it acts as a strong. What happened to this strong move? Institutional entry zone, okay? Yes, because afterwards, okay, price will retrace in this order block, and that's where the money will, the price action will go more. Okay, more pressure on this price area, and then it will, push the price either up or down, depending on that order block. Then it's a high probability reversal areas, as you can see. You think it's just going down, but it will hit this order block, and then finally it will push the price up. Stop hunts, okay, sudden move against retail positions. Okay, I told you it will wick this. Okay, it will wick this. What happened, huh? Okay, sudden move against retail positions. So I thought, as I told you, it will wick this area, triggering all their stop losses, and then it will go to that other direction and triggering the stops before reversing. Yeah, clears liquidity for institutional entries. All right. Hope you understood that. Fair value gaps. Okay, price imbalances left behind. As you know, when price is just going in one direction, okay, the other side, okay, they cannot participate in these price areas, and then it will leave these gaps between the candles. Institutions often return, okay, to fill gaps. So as you know, when there's a fair value gap, price will go back to this fair value gap, and continue to that direction. I hope you already know about this, but as we go along, you need to again refresh your memory, and I hope you will not forget this anytime soon. Now, used as confluence for the entries. Yes, very important. Either the fair value gap or an order block. These are very strong confluence for your trading, where you can decide when to at least give you more edge to enter that this trade idea will go your way. All right. Now, okay, how to spot the smart money concepts? Okay, look for liquidity grabs. So this is somewhat like a guide, okay, for you. This is the trade idea. Okay, look for the liquidity grabs, as you will see later on. Identify a change of character. All right, because the change of character is very important, because this is the reversal point where if you can identify this in the chart, it means the trend has reversed. I see when you are waiting on when you see an uptrend, okay, and then you want to sell later on, what you will do, you will look for the change of character if you want to sell, because price cannot just go up forever or go down forever. So we need this change of character to happen. Okay, without this change of character, then don't place your trades. All right, mark your order blocks and or okay and or FVGs. It could be and or FVGs. Trade in alignment with the trend. So once you have the change of character and then you spot your order blocks or FVGs, it's trade in the alignment. Okay, so when you see this change of character after the uptrend, so don't buy after the change of character. You have to sell after the change of character easily. That's it. That's all there is to it, my friends. All right. So the next slide. Okay, identify liquidity above a swing high. So in this price action, for example, price is going this way. Okay, and if you will notice, my friends, all right, where's the equal highs here? Anyone? That's it. This this is the liquidity. See, equal highs means okay, a lot of stop loss there. All right, so this is the liquidity. It wick this. Okay, if you can see clear, there's a wick there. Okay, that's the liquidity. Okay, so that's how you spot this kind of uh, kind of trade idea here. All right, then what else? Okay, price spikes to grab stops. All right, you see there's an equal height and suddenly there's a spike there triggering all their stop loss there, and then finally price went on onto the other direction. All right, and what else? Okay, identify the change of character. Just like this, price was in an uptrend, getting this liquidity here, stopping everyone there, and finally it made a change of character here, and that's the time to sell. Okay, this is the time to sell when you see the change of character. All right, what else? Okay, reversal from order block with FVG as the target. So when you spot this change of character here, for example, okay, you cannot just okay enter immediately. Okay, you have to wait because price can just go up there. Okay, making some order block in this area, but in this trade example, it made the order block there, and then finally when price retraces to this order block, it pushed the price down. Okay, to where? To this FVG. You can see here, this is the FVG. Okay, there's a lot of FVG there, and then price just moves there. Okay, for some time it went on a sideways motion there, and then finally, who knows, it could went more on the downside. So that's how you will enter some trade. Okay, there's always a pullback in this change of character. Okay, as you all know, this will be our bearish example for tonight. Majority of the time, I'm showing you the bullish example, but now some bearish example. All right, so. Okay, the trade idea, identify liquidity above a swing high, which you've seen here. Price spikes to grab stops. Okay, like just like so. Wait for the change of character. Reversal from order block with FVG as target. Entry in the kill zone session. What are these kill zone session? Okay, either end of London, beginning of New York session. These are the kill zones. Okay, there's some zone there where majority of the time the price is just just a lot, okay? Because there will be a lot of participants, but it doesn't have to be always like that. But if you are there and at the right time, you were in the kill zone, more that London and New York overlap, then that's the best way to enter the trade. All right. Now, what else? Risk management, of course. I'm always advising you to risk 1 or 2% of your capital. All right. Always trade with a plan, then use proper stop losses beyond the liquidity zones. Okay. So for me, when I'm trading gold, I'm always using a 50 pip stop loss. Regardless if it hits my stop loss at 50 pips, then that's so be it. Okay. Because trading is trading. You cannot, but as you go along, in your trading journey, there will be some clue where you can see in your chart that okay, this is the best place to put my stop loss here. There's a swing high, there's a swing low. Okay, there are wicks there. Okay, price cannot go down in this week. It means this area is being protected, and you can put your maximum stop loss there. All right. And what else? Minimum of at least 1:2 risk to reward ratio. Okay, for example, okay, you are willing to lose $10 in this trade, but if you will win this trade, you will have $20. Okay, you can go 1:3, 1:4, the better. But okay, don't take a trade when there's only 1:1. Okay, it's just like nothing. Okay, you cannot capitalize well enough in this kind of risk to reward. All right, at least 1:2. All right, now some key takeaways. Okay, smart money hunts retail liquidity. Okay, recognize traps to avoid losses. Yeah, when you see these spikes there, stop hunt. This is stop hunt. So just wait for this kind of trade idea. And the more confluence you have in your trading, and the better for you can enter in in those trades. So trade with institutional footprints, yes, because these banks, okay, these institutions, they will leave this trail, okay, in the chart every time. Yeah, because that's why you have to wait, okay? As long as you don't spot this kind of things in your chart, then means the story is not yet complete, okay? Because you will be trapped there, and then at the end of the day, it will just trigger your stop loss, and yeah, you win nothing in the end. So always recognize this. Just trade with the institutional footprints, and patience and discipline are essential. Yes, my friend, when I was starting, I'm trading from the market open in the Asian session. Is yeah, I cannot forget this this experience I have. I will have my alarm. I will wake up in the morning, and then market open 6 o'clock. I should be all my computers are on, and my trading view is open. Everything is open. Then I'm just waiting from 6 o'clock until late in the afternoon, just watching the chart. Because before I was really so interested in trading. I'm so passionate. Like I need to understand everything. Yes, I can understand it by now. I maybe some of you are the same. You are always if you have time, of course. I know we are all busy in our life, but if you have the time, maybe you are just looking at this chart, the whole day and just go crazy, just watching this price action and anticipating when to enter, when to when to exit. But trade that's a life of a trader. We cannot, we're not all the same. But for me, I'm just sharing you my past experience, and now I'm not doing that anymore. Uh, thank God I'm not doing that anymore. I can wake up late now, like I don't know, 10 o'clock. I will wake up 10 o'clock in the morning. I don't care because lately I'm sleeping late also. So it doesn't matter now. Now, really, okay, at least London session, okay, I'll try to find a trade like when it's 2 o'clock. I will start looking at the chart, because Asia session has finished and London open. So I will see some trades I can get there. And if I don't find any, then so be it. I will wait for New York because exactly, my friend, I'm giving you one tip. When New York opens at 9:30 here in the Philippines, okay, you have to be there. Like at least by 9 o'clock, you should be there, and you will see the distribution now. Okay, as you all know about the AMD. Okay, when it's Asian session, it's accumulation. It's just going in the sideways motion, and then by London, it will manipulate. So M stands for manipulation, and London will manipulate either the Asian high and the Asian low, and then by New York, it will distribute, and you go back to the other. So New York will always, majority of the time, like 99% of the time, it will reverse the London trend. So when in London it's in an uptrend, rest assured, New York will reverse this. Okay, you will always see this in the chart. Okay, and what else? Yeah, that's all. So those are some key takeaways. I'm just sharing you all this experience I had. And the conclusion now is trading like institutions give you an edge. Yes, because you are following the big boys, okay? You are following their trend, and the more you will be profitable in the end. Stop trading like retail, okay? Start thinking like smart money. Yes, you will be in this stage in your trading journey where scalping is not I mean, what do you call that? I don't know that like hindi na siya, okay, hindi na siya parang, oh my God, I'm losing all these words. Like hindi na siya importante. Yun yung scalping, like baliwala na sa inyo. You want to, like smash the profits well, like hundreds of pips. Sometimes, uh, if you will just look at the price action, especially lately, you will see like the reversal is like going to 100 pips easily now. 100 pips reversal. Wow. If you can catch this type of trend, then the more profit you will have. Mastery comes with practice, of course. Okay, the more you see the chart and its price action and the way it moves, you will have this idea, because when you're watching the price action during the Asian session, you will notice it's not going anywhere, it's just going the sideways, and then you will see London manipulate this until New York will distribute in the end, for more of this pips. So mastery comes with practice. Okay, I don't know how long it will take you to see this, see it well. Okay, in the overall picture, but you can always do it. Okay, just do it. If you will not go and try this yourself, and how you will know. Okay, I'm just telling you all this. I don't know if you are really understanding me, but better for you to try it yourself. Okay, because experience is the best teacher in life, especially in trading. Okay. So, what else? Now we will go to Algotur. Okay, Algotur is a quantitatively driven trading company focusing on market making and multi-asset trading. Its expertise spans various asset classes, including futures, options, stocks, commodities, forex, and cryptocurrencies. Algotur is a quantitative trading service company with over 10 years of experience in strategy development, focusing on proprietary trading. Let the numbers talk, as you can see this in our screen, and you can always visit Algotur's website to know more about this. All right, and we also have copy trading, where copy trading lets you automatically replicate the trades of expert traders in real time. without the manual effort. So start with only $100, and you can always contact our algorithm managers, and they will be gladly to assist you. All right, my friends. So if you want to, make some money on the side, as you know, we're all busy. Who knows? When you copy trade and grow this small capital, like $100 into $1,000 in 1 month, then wow, nice. Okay, so don't forget that. I hope you will consider that as well. And we have also some insurance program where if you are at a net loss, Algoter will reimburse your qualifying losses. Keep 100% of any profits you make. Originally, this was $1,500 to subscribe, but now for only $500, you can avail this and, make some money. As you can see in this table here, there's a sweet spot here of $6,000 where you will have a return of investment of 26.79%. A lot of benefits here, daily 2 to 5 signals, and much, much more. 24 um, trade support. All right. So if you want this, contact our algorithm managers and they'll be gladly to assist you. All right, my friends. And obviously, as you know, Zoe, we are always using Zoe to trade now. Zoe is a global financial technology company under the Zoe Group, headquartered in the United Kingdom with operational centers in Hong Kong and the United States. Specializing in CFD trading, Zoe offers a diverse range of financial products, including Forex, precious metals, oil, indices, and US shares. Zoe is fully regulated, offers a secure professional trading experience with competitive fees, fast execution, and powerful tools to grow your investments confidently. Okay, available in Google Play and App Store. And you can install Zoe in all your mobile devices, including tablets, and trade on the go and capitalize. All right, my friends, I hope you already have Zoe in your mobile devices. And, I also want to vouch, because many times I already withdrawn my profits here, my earnings, and it's even going straight directly to my Gcash, and I can enjoy this anytime I want. So don't be a skeptic, okay? Zoe is really nice to use. Also, this is powered by TradingView, where you can get the best price action every time. All right, my friends. And lastly, our 50% deposit bonus. You can always avail this, 100, you will get 50, 500, you will get 250, and 1,000, you will get 500 extra. Wow, very nice. Avail, my friends, okay? Contact our algorithm managers to get this deposit bonus. All right, so we reached the end of the slide, and now we will go to our chart and see this in action. All right, my friends, let's do that now. Okay, let me just drink, okay? I'm getting thirsty. All right. Okay, we are in gold. Okay, typical price action here. So, how do we trade this? How do we trade like the big boys, like the institutions? All right. For sure, we have to be in a higher time frame. Okay. First step, you need to be in a higher time frame. But for our demonstration purposes, we will stick with the lowest of the higher time frames, like the 1 hour, so we can see the price action. Even in your day trading, this will be nice. In the 1 hour, you can get more pips out of the 1 hour. Like uh, it's like 23 hours a day. Okay, you will have 23 candles of price action in the 1 hour. All right. So now, once you have that, okay, you are in the 1 hour time frame. Just watch the price action. Okay, what you need. Okay, let's go back to our slide. Where's the trade idea? Okay. Look for liquidity grabs, okay? Identify change of character, mark the order blocks and RVGs, and trade in line with the trend. That's it. That's all you need to remember. All right, my friends? So we will look for the liquidity grabs. Okay. Now, as you can notice, this is going in an uptrend, right? It's breaking all this uh, higher low here, okay? Now, there's a change of character here, right? Okay, so it's going in the upside. Now breaking all this, boss, these are the boss. I hope you already know about this, my friends, huh? Break of structure, going to the upside. Okay, and another boss here, okay? That's it. Now it's really in an uptrend. You have confirmed to yourself that this is now in an uptrend. Now, let's play this price action where we should go. Now it should break this, right? This is now the higher low, a higher high. Okay, it should break this, right? Okay, let's see now. There, body kind of close above this higher high. So now more it will go to the upside. That's it. Okay, just mark it in your charts like this. So more to the upside. Let's see where this will go. Okay, okay, still going. And as it goes along, as I've told you, okay, see, there's a fair value gap here, right? Okay, so sellers were not able to participate. There's no struggle, there's no battle between the buyers and the sellers here, as the buyers are really overpowering the sellers at this point. All right. So still, huh? So I'm just showing you what's that's how you see the chart, my friends. Okay, slowly in the 1 hour. My God, this is like 1, 2, 3, 4, 5 hours just watching this in your chart in for 5 hours. You have more time to analyze the chart. You just don't look at the chart blindly like this. Okay, you have to ask yourself or talk to yourself, oh, what is this? Ah, fair value gap. Okay, okay. And then you will start to spot these things in the chart. Well, now let's see more price action. Okay, so what do you notice? The canvas are becoming small. It's like nothing. You see, there's a doji there. Okay, as you know, doji is a example of reversal pattern. Okay, candlestick formation there. Like it's like maybe this could be the time to go down. Yeah, ask this to yourself. Ask yourself, yes, maybe it will reverse now. Okay, and then you will see this shooting star. Sorry, yeah, shooting star there. And then you can say, oh, maybe a hammer, no? And then you just notice, oh, the candles are getting smaller. So where's the volume? We need something. Okay, so at this point in time, okay, since this is in the 1 hour, now you have more time to analyze, ask yourself and to confirm all these things. Now, okay. You see, when you see this red candle now the volume are now coming in back to the market. So now the sellers are interested to sell this. Okay. So now you have to, like mark this price action here. Okay. You will just put a line there. Okay. It could be anything. It could be a box here, anything just to mark this price action. So what is this, my friend? It means there's a resistance forming now in this area. Okay. Okay, price cannot just go there. Why? For how many hours now? 1, 2, 3, 4, 5, 6 hours. Like half the day is gone without happening. Okay, no, nothing is happening. So those are the telltale signs that price could reverse this. Okay, so let's see. Okay, started too weak, but still not substantial to because if you will zoom in, okay, okay, this is really the highest the price had went. Okay, this week here is the highest. You see, if you want some liquidity to happen here, there should be it should break this, okay, by the week or something, or something for the liquidity grab to happen. Okay, look for liquidity grabs. Okay, now moving on. There, that's the liquidity grab, my friend. You see, it opened here. Okay, it went there. Okay, when you see this candle forming here, okay, because you are still a buyer. Remember, you are still a buyer. It was a green candle that time, my friend. It was a green candle. Oh, why didn't feel this? Ah, sorry, it should be this. Okay, it was a green candle that time. I said, yes, we're going to the upside. Yes, there's a breakage there. Okay, now I should go. I should win this trade. But for how many pips you were winning that time? Okay, example, price went and past this area like 3 4 3 3 3 3 to 3 8. Okay, 3 5 to 3 8. Okay, that's 30 pips. Okay, depending on your position size, maybe you are getting $20, $40. And I said, oh, now very good. Let's go, let's go. But you notice in 1 hour this is going down, but you're still hoping. Why? What happened? I'm losing all my money now. You are in a because you entered here. Okay, you entered here, right? You want to break this high, and let's go. You entered there. You put your stop loss where? Below this candle, right? And then you were winning, but you were winning by that time. Okay, the candle was there. It was green, right? It was green that time. Okay, let's see. But price is going down, okay? And then it hitting your negative. Now you are in a negative, okay? Just visualize, okay? And now I'm in a negative. Oh, what's happening? But you are still hoping because this concept is still not in your in your strategy. Okay. Now, once you have this, okay, it closes now in 1 hour, it closes. Maybe it will go up. Now you will wait for the other candle, right? You will wait. Maybe it will give me now a big bullish engulfing to come here. But you are waiting, okay? You are waiting. Then the next hour, the more it went down, now hitting your stop loss. Let's say you entered there exactly after that. Okay, somewhere here. It's just an example, okay? And now it hit your stop loss. Okay, you have your 50 stop loss below this candle there. Now it hit your stop loss. Now what to do? Now you're out the game. That's the idea, my friends. Okay, it means you didn't wait at the right time. Okay, because yes, you should enter here in a long position when this green candle closes. Pag sumara na siya dito sa taas, okay? But hindi pa siya. 1 hour is not finished yet. Okay, and then suddenly dito siya nag-close. So that's where the problem starts. And now you are waiting for this candle, but it went down. Now triggering your stop loss. That's the idea, my friend. Okay, so always enter body candle close. Okay, wick. This is the telltale sign na this is the clue I want to see as you go along in this list. Okay, now, what is the next step is to identify the change of character. Now, this is what we want to see. The change of character. Okay, playing now. Okay. Okay, so it was going, okay. It closed it, but it was a green candle that time, okay. And then it closes like this, like I don't know, they call this the tombstone or something, some candle formation, okay. But that's not the point here. All right. So price is now making all this. Okay, so it's going in a sideways, okay? Now, if you are here, you will be trapped now. Okay. If you want to still want to buy now, you are trapped. Okay. Because it was a green candle here, and then you will enter here somewhere. Who knows? Huh? Some example only. Okay. And then you anticipate, you put your stop loss here. Okay, targeting, I don't know, somewhere there, you find something there, something to target, but you are trapped in the negative, especially in this time frame of 1 hour. Okay, so that's not the way, huh? So now we need that change of character. So where is the low now? Okay, this was the higher high, and now this should be the some change of character should happen now. Now we need to see the change of character. Now it's still going there. See, this is now the manipulation. Okay, now the banks, you are thinking, oh no, no, it's going up again. Now I want to buy, but no. Now let's see, huh? Okay, now it even went back to this area. This is the manipulation. This is the trap. Okay, they are doing to us. Okay, now because this is now the clue. The first clue is this. Okay, price didn't close above this. Okay, it just weak. Okay, it closed below. So this is now the manipulation. Okay, it's tricking you to buy again. Okay, but let's see. There, big bearish engulfing there. This is the second clue that price now wants to sell now to the downside. Okay, let's see. We need some change of character here. So where's the low? Okay, okay, going there. Okay, there, my friends. You see, there. The more now it made this now the change of character. This is now the change of character. Okay, now price now really wants to go down. Okay, Magdas has your change of character. Now what? 1 and 2 is done. Mark order blocks and or FVGs. So we will now spot this order block here. Where is my order block? After this change of character, we need an order block. Okay, so is this not an order block for you, my friend? Okay, now sorry. Now once you have that, okay, you go to the 15 minute, okay, for your entry, okay? Go to your 15 minute. Now you have this in your chart like that, okay? So where is your order block? At this time, okay, it made a change of character. Where's that order block? This is your order block, my friend. This. Okay? Mark it like that in the 15 minute. Price should retrace this, okay? And then we will enter from there, okay? Let's see what will happen. Okay, as I told you, this should always be a pullback, okay? For the downside, the pullback is going up. For an uptrend, the pullback is to go down, okay? But now this pullback should go up. Okay. Now, this kind of example, okay, when you see this really some fair value gap here. Okay. So price cannot go up there, okay? So it means because in trading you cannot just say we should go. This is the textbook, okay, example, okay, of this order block. Where is the other order block? So it means the order block that it respected is this one. This one. Okay, mark that from week to week, huh? Week to week. Okay. So this is should be the order block, as you will see in this price action. Okay, it taps there, right? It taps there. Okay, it's still inside this order block. Then there is the bearish engulfing. So short position, stop loss just above this order block. All right. Now you have this trade idea now. Okay. So you spotted this in the 1 hour, right? We started this in the 1 hour. So we will go back to the 1 hour to get our targets, our take profit. So okay, trade in alignment with. So now we are selling. Correct. We should sell because this is the move that's happening now. So where is the target? Mark the FBG you can see here. Okay, this is an FBG. This week didn't touch this week, so this is an FBG. Okay, what else? What else? Okay, if you will stretch this, okay, it's in a key level also. Okay, it's in a key level. Okay, there's a resistance there. Okay, so this is acting like a key level. Okay, price wants to go to these levels, and if you will see, okay, what is the prices here? 3380, 3380, okay, 3390 above there. Okay, so these are like whole numbers. Okay, whole numbers siya. So 3380, 70, 50, 3350 somewhere here. Okay, there's 3350. The price action, okay, or the big institutions are targeting these whole numbers. So this is the take profit you must have in your mind, okay, your target. So price should hit this FVGs here. Okay, it started now here, this FVG here, this is a big fair value gap here, and price just went down there, right? Now target this target this area as your TP1. What else? Yes, you can go here for in the 1 hour time frame. Okay, this is now nothing for this 1 hour time frame. You will target this at least maximum. You are trading with the institution, big banks. Okay, this is nothing for them to target. So now when you spot them, okay, making all these moves, giving you all these clues, the only thing to do now is to play this trade and see if it will hit all this. Because this one, you see, this is also acting as a key level. Okay, this is acting as a support. Okay, it price went back there, and then from here taps it, it went back there to the upside. So this is really acting as a key level. And if you will stretch this out, you see, it's in the whole number 3,300. You see, 3,300. Price could really just go dump this price action here. Okay, but to be safe, okay, at least in this key level, huh? In this key level. Okay. Let's see now what will happen, my friends. We are in the 15 minute. Everything is set. Let's play now. I hope this 50 pips will protect our entry here. Okay, 11 to 70. Okay, that's more than enough. Let's play it out. Price just go down, and now it's just waiting for our trade idea to hit our take profit. All right. So as you know, you see, that's it. There's no way for the price to go. All this liquidity here, all these fresh levels here, Malaysian SNR trader, if you're a Malaysian SNR trader, this is very easy for you to spot now. All right. So the big boys have just dumped this price onto the downside. Now, just for some more moments here, hopefully it will hit this key level, huh? That's it. You see, it hit the key level because, price really wants to go back to this key level, and this is near the whole area here, whole number here, 3,300, okay, 3,310, 3,320. That's the big banks targets, my friend. Okay, if you will continue to play this out, it could go down to 300 even here. It could go in this price, huh? 300. Okay, you see, it went to this whole number here, 300. So that's how the big institutions are placing their trades. All right, it's just stay in the 1 hour. Okay, in the 1 hour, it will look like this, and that's where you will capitalize. Okay, once you have these things here, this don't be a FOMO, a fear of missing out. It's already went a lot of pips there to the upside, but once you spot the change of character, get that order block there working for you, place your trade with that after that bearish engulfing in the 15-minute. Okay, as you all know, the bearish engulfing is my favorite pattern to enter. You see, I spot that bearish engulfing. We place our trade there and never hit our stop loss, my friend, right? So that's it. So I hope already shown you again under secret sauce how these big institutions are trading the forex market, and I hope this will give you an edge on under your trading journey. Okay, my friends, thank you all, my friends, for joining for tonight. We are over time, and hope we'll get to see you again in our next webinar. Okay, my friends, review this webinar in our go to our YouTube channel where you can master this strategy again and again. Okay, my friends, thank you. Good night and bye bye.